Hello, my name is Elgirmash Nahoyek and my number is 143. My topic today is China's Ant Group set to raise US $34.5 billion in world's largest IPO. So the terminologies I have used in this news article is IPO, the process of private companies to share their stock publicly in a new stock issuance. Term sheet is a non-binding agreement that shows the basic terms and conditions of an investment. Pre-market is the period of trading activity that occurs before the regular market session. Investors watch the pre-market trading activity to judge the strength and direction of the market to anticipate regular trading session. So what actually happened? Ant Group, the fintech arm of Jack Ma's Chinese e-commerce giant Alibaba, declared to raise $34.5 billion in the biggest IPO in the history, planned on November 5th. Shares in Hong Kong will be priced at $10.3 and the shares in Shanghai will be priced at about $10.2. Ant Group is the parent company of Alipay, which had more than 1 billion active users as of June. Alipay allows users to make purchases, borrow money, invest, and even buy insurance. This is the sources that I have used in this article. Why did it happen? Ant Group has priced their net worth at $313 billion. In 2019, the profit was $2.5 billion and the revenue grew to $3.2 billion as of 2020 June. Alipay, the mobile payments app Ant operates, had more than 1 billion annual active users in China. More than 80 million merchants used Alipay for businesses over the course of a month. What are the potential impacts of the event? Shares of Alibaba, Ant's original parent company, rose 3.8% on October 20th morning, meaning that Alibaba's shares might also increase after IPO. The State Department of US is trying to add Ant Group to the trade blacklist, which would restrict American companies having any business with Ant Group. What is my opinion? So my opinion is the Ant Group might have a huge success in their IPO, and it might affect Alibaba and the whole country's market situation. The US is trying to blacklist Ant Group, and that would not be that of important change to Ant and its stock market price, but the investors might think twice before buying US blacklisted company stock. So these are the references that I used for this news presentation.
Hello, my name is Tilmani Glide with the sign number 115. My topic is the overseas activities of Chinese banks shift up gear. To use my terminologies that I learned by myself. Global League Table is the comprehensive ranking of private equity and venture capital activity worldwide for the full year. Cross-border lending is the process of providing funding for business activities that occur outside a country's borders. trade volume is the total quantity of shares or contracts traded for a specified security. The world thinks that China's banks are either uninterested in global market or uncompetitive abroad until some new study refutes this argument. China's banking system is broadening globally, and a paper by BIS and IMF shows that the China's banks reign in emerging markets that the Western lenders either never entered or abandoning recently. In fact, this year, some of China's policy banks show an increase from 5% to 7% of total cross-border lending flows and lent to 196 countries in total. In half of these emerging countries, the Chinese banks are the largest cross-border lenders, which in fact they provide 26% of all cross-border loans to emerging countries. So why did it happen? The most key dominance is the information about the foreign borrowers they get through the correlation between cross-border lending and trade volumes for foreign direct investment and portfolio flows. And most importantly, little or no relation to investment flows leads to a suspicion that this reflects China's capital controls, which is portfolio investments target richer markets. What are the potential impacts of the event? So this brings up two sides which are risk and reward. China could be a much needed capital. On the other hand, as it integrates more globally, it could gradually loosen its capital controls, which could let the lending floodgates to open. So in my opinion, on the one hand, the approach of underestimating a Chinese bank could lead to a tight situation, and on the other hand, China could be a needed capital.